The market cap of AutoZone is $67 billion, revenue of 18.9 billion, net income 2.56 billion. So they've been profitable consistently. Their PE ratio for a slow grower, I would mention this is a high PE ratio. You're growing 2.4% top line. You should really be priced with a PE of 18 or lower. I have see a lot of stocks in their category being priced with a 12 PE. Analysts really like this stock. I can see why. In the past year, it's up 31%. In the past 5 years, 245. So it's easy for analysts to really agree with this company, like the company, because it's been a terrific performer. I mean, look at this stock chart, just fantastic. And they really have engineered a nice stock chart. Congratulations to the management team. That's their job, is to make the business more valuable. As we look at the business, they had high growth rates during COVID. To me, top line growth is really important. This shows, are they successful in getting greater wallet share of that customer? Do they have pricing power? Is there more competition? All those things show up in that top line growth. And a growth rate of 2.43% really shows that this business is not overly powerful. They don't have a strong moat. They don't have an ability to continue to grow. 21 analysts cover this stock, and most of them like the stock. There's some price targets as high as $4,925 per share. But there are a few analysts that believe the stock is priced too high. I completed a valuation for AutoZone, and here's what I've come up with. I think the stock is priced 30% too high. Each share, if I look at the value of the company based on their future free cash flows, as well as looking at the future profits, I think the stock is really worth $2,814 per share, but it's trading over $4,000 per share. So it's 30% too high. The free cash flows is where we have the biggest issue. And the reason for it is their cash flows aren't great and they're not growing. They actually contracted. If you look at the previous year to the year they just completed. So I took their trailing 12 months and I'm growing cash flows by 5%. It's not a given that they're going to keep growing, by the way, because there are some economic headwinds. And we'll see how the EV market, which has fewer parts, and as cars make it into service for more and more consumers, there may be a lower need to go to AutoZone for repair parts as you have more electric vehicles in the market. The company has a little bit of cash and it does carry some debt, $8.8 billion of debt. The company overall equity value, when I look at the net present value of free cash flows in the future, add cash, take away debt, I get to $38.8 billion. But the market cap is much higher at $67 billion. So I'm actually showing that the stock is 42% priced too high